Well, we were obviously in a period of frenetic M&A activity globally. The U.S., as usual, is the number one jurisdiction, but M&A has really exploded this year. It's trending toward a record year. The record, of course, was in 2007 at 4.3 trillion, but we are looking to increase beyond that this year. Now, having said that, this is a very different playing field than it was in 2008, 2007, and that's what's coming out today. The jurisdiction by jurisdiction approach that we've taken here at this conference has highlighted the very specific challenges and opportunities in each jurisdiction.
The US is by far the biggest inward investor into Europe in terms of M&A, far exceeding anything that's coming from the so-called Asian tiger. One day that might happen, but it's not happening yet. If you actually look at the numbers, you'll see an increase of about 7 to 8% in terms of the number of deals of US inward investment into Europe. In terms of jurisdictions, they're using many different jurisdictions, the UK and Germany being the biggest, but there's still significant activity in Italy, France, Spain, etc. Particularly on cross-border deals, there is a role for an international law firm to actually assist in terms of the project management and the local nuances around an M&A structure. So one of the things that I'm very excited about today is being able to show our new deal track approach that we're adopting, and in conjunction with the American lawyer, we're hoping to show that to the audience today.
Many things will be very familiar to US General Counsel about doing M&A in the UK, particularly on the private side. You'll recognise a lot of the basic contractual agreements. There will be a few key differences about how we give warranties, perhaps about how we disclose data, but that will be familiar territory. I think what will look quite different is the public M&A regime.
The importance and effect of regulatory on every deal that we do is significant. And companies now are not looking at financial transactions as much as strategic transactions, and how important the use of capital and the cost of capital are. That drives a lot of the deals.
The M&A market in China continues to be dynamic. There's no hiding the fact that there's more uncertainty in the China market these days, and that's impacted the way people look at deals. So in our presentation, we're going to talk a little bit about how people are dealing with that from a legal perspective. So we're focusing on issues such as material adverse change and how that's being negotiated between multinational parties from outside of China and Chinese parties. So hopefully that's something that people would want to hear about.
India fundamentally is a very strong country, and typically if you see in terms of plain GDP, we are 11th in number, and in terms of purchasing power, we are 4th globally. Recently, if you see the phenomenon, what we are seeing is that the middle class, the growth of the middle class and the purchasing power of the middle class, it's a huge market there. So every global investor and global strategic player wants to have his own market share in India, and it is the sheer size of the market that no one can really ignore India. I think that's what is making the global investors and strategic players to come to India, and these are very serious players, and they are long-term players, I guess.
If you take into consideration the supply and demand economic rule, you will see that the local currency is devaluated. There are lots of assets in the market. Brazilian companies are in need of cash right now. So in a nutshell, assets are cheap, and the economy as a whole is very reliable. We are a 200 million people country. Our GDP is 2.2 trillion. So I would say that it's a very good time to start to think about buying assets in Brazil right now.
The Canadian economy has been suffering lately because of the decline in oil prices, but what we're seeing now that's creating real opportunities for us. Our currency is down, so Americans, Europeans coming to Canada are finding transactions of real value. And there's really starting to be integration and lots of real opportunities, particularly in Western Canada, to do good deals and make lots of money.
The interesting points made around dealing with the different participants in a transaction, the patience you need to have to deal with the different cultures that arise and the different issues that arise from dealing with transactions and dealing with people from all over the world to get a deal done and over the line. That's what I thought was the most interesting.
There are all sorts of things that were discussed today that can come up and bite you. In particular, I think what we're looking at is a due diligence challenge in some of the more opaque jurisdictions in China, India to some extent, certainly in the Middle East, the UAE was the topic of a very specific concern about that. But all in all, and particularly in Europe, we're seeing some real change in a somewhat down environment of early years. We're seeing M&A being ramped up in some ways in a reaction to the lower profits we're seeing, to the high value of the US dollar, which is encouraging US shopping abroad. Also, the imminent raising of interest rates, which is making some executives think that now is certainly the time to do it before rates go up. So all of this has contributed to a very positive environment for M&A, but one that is absolutely strung with regulatory and political risks.